Good day, everyone. In today's discussion, we will focus on an important topic in financial accounting and reporting, or if you are taking auditing problems, which is financing and breach of contracts according to PAS 1. Before we start, I'll give you a moment to pause the video so that you can read the problems, and once you're ready, we'll continue with the explanation. Let us continue our discussion. In this problem, we are required to compute for the current portion and for the non-current portion of the liabilities. Then we have to come up with proposed necessary adjusting entries, and we have to identify necessary items for disclosure in the notes to financial statements. According to PAS 1, refinancing is the replacement of existing debt with a new or with a long-term loan or the rollover of the obligation. As a general rule, if we will be following PAS 1, if the liability is due to be settled 12 months after the end of the reporting period, meaning 12 months after the end of the reporting period up to December 2021, if a specific liability is demandable, if a specific liability is due to be settled up to December 2021, then that will be classified as current liability. Now, there will be an exemption. If the refinancing is as of the balance sheet date, the company has the right or the option to refinance the liability on long-term basis, then that specific liability will now be considered as non-current liability. Or if the creditor agreed with the debtor that refinancing will be completed or will be agreed upon on or before the balance sheet date, that will also make the liability to be classified as non-current liability. Now let's answer the problem. The end of the reporting period for ABC Company is December 31, 2020, and the date that the financial statements is authorized for issue is March 15, 2021. We have here a list of liabilities. Kindly take note that the liability here is before any reclassification, meaning if we will be classifying the liabilities, then what we will be getting is the correct treatment. We have here the accounts payable of 7 million. Sometimes it's called trades payable. So 7 million, that's a current liability. Then another component of current liabilities will be the notes payable, 5 million higher than accounts payable, so 7 million plus 5 million, 12 million. Then we have here accrued expenses. It says here that it is one third of the notes payable. So 12 million divided by 3, you will get 4 million. So let's read the next paragraph. The entity intends to refinance 9 million of the 12 million banknotes payable on a long-term basis. But we have to check if the refinancing took place on or before the balance sheet date, because that is the requirement of the accounting standard for us to classify that the liability is a non-current liability. So it says here, although the entire 12 million is due on June 30, the following year, the bank has informally agreed to extend the maturity date of 6 million to June 30, 2022 if necessary. On January 31, 2021, the entity issued share capital of 4 million net of issue costs and underwriting fees of 500,000. Take note, class, that this portion or this statement should be disclosed to the financial statements. Okay? Since the refinancing took place beyond the balance sheet date, which is December 31, the actual refinancing happened only on the following year or after the balance sheet date. So it is not an adjusting event, therefore the whole 12 million notes payable is correctly classified as current liabilities. Next, on February 15, 2021, the entity entered into a financing agreement with a financially capable commercial bank, permitting entity to borrow up to 3 million. Borrowings available at the entity option on April 1 the following year will mature 5 years after the loan date. Okay. Since the financing agreement took place after the balance sheet date, then this is not an adjusting event. So it will not have any impact on the classification of current and non-current. Therefore, the accounts payable, notes payable, and accrued expense of 7 million, 12 million, and 4 million respectively, that is the total current liabilities amounting to 23 million pesos. We have here the non-current portion, the mortgage payable, same as accrued expense, which is 4 million. And we have here the note payable due in 2022, one-fourth of the notes payable in bank. So that will be 12 million divided by 4, 3 million. Take note that generally speaking, notes payable are considered to be current liabilities, but since this payable will become due on 2022, then it is classified as non-current liabilities. Our total non-current liabilities amounting to 7 million pesos. Therefore, our total liabilities is 30 million pesos. To answer requirement number 2, there will be no necessary adjusting entries since there will be no adjusting events that took place. That's the end of our study session regarding refinancing.